This past month, I made $46,000 from trading, and in this video, I'm gonna break down the 5 lessons I've learned throughout the years that has allowed me to make 5- and 6-figure months a regular thing. But before I get into it, if you're looking for a full step-by-step strategy, how I trade the markets each and every week, make sure you download the free PDF guide. I'll leave a link in the description. Also, if you're new to the channel and wondering why you should listen to me, my name's Kyle. I've been trading the markets for the past 13 years. And just in the past few years, I've been able to quit my job, trade full-time, and make over $1.3 million using prop firms. And if you don't believe me, here's some of the receipts. Now, enough about me, let's dive into it. So, lesson number 1 is going to be stop thinking about the money. I know this is going to be something that's extremely difficult for many traders out there, and when I first came up trading, $5,000 meant a whole lot. So, if I was going to take a $150, $200 loss, it meant a whole lot to me because I only had $5,000 to my name. But what I had to quickly realize was that good trading has nothing to do with the money. And if I had to look back at my trading career, the same trade that I took that made me $200, $300 nowadays can make me $1,000, $2,000, $3,000, even sometimes $20,000. And it's not about the money that's behind the trade. It's about taking good trades. So if you just remove the money aspect, that same trade that you make right now that made you $100, if you take that trade in the future with more size, you could possibly make an infinite amount of money. Trading is extremely scalable, and your position size doesn't have anything to do with the actual trade itself. So something I had to learn very quickly was the more I thought about money and the more I was so worried about losing or making money in a trade, it was just causing me to make bad decisions in the markets. But if you can actually detach yourself and stop caring about how much money you're making or losing, that is really the only way that you're going to find success in the markets. So one thing that you really need to focus on is just a unit of risk. And that unit of risk can be whatever number you want it to be. But when you're thinking about R multiples and risk reward, if you're aiming for a 1 to 2 risk reward, the 1 doesn't matter what it is, whether you're risking $50 or $500 or $5,000. Yes, there's an emotional attachment to that specific level of money, but you could possibly be taking the same trade. So there might be a trader out there, let's just say Johnny, he takes the same exact trade as me, but he's risking $5,000 and I'm risking $2,500, and our targets are 2R. He might make $10,000, whereas I'm making $5,000. That doesn't mean I'm a bad trader. We took the same exact trade and he's just ending up making more money because his position size was bigger. But as traders, we often tie our success around how much money we're making in the markets. Now, there could be a trader out there with a $500 account that is outperforming you percentage-wise and risk multiple-wise month over month than if you would have a $10,000 account. So if that trader that has a $500 account has made 10% on the month and you've only made 5%, the person that has the $500 account is a better trader. But when it comes to the markets, our egos are attached to the amount of money we're making, and we don't really think about our actual performance behind the numbers, which is why that metric is so important. So the easiest way to stop thinking about money is really to detach yourself and only think about R multiples. And usually the people that aren't able to detach from the money are usually the people that are never able to figure out trading. Lesson number 2 is probably a big one, is not every setup needs to be taken. So as traders, and inexperienced traders for that matter, think that they need to learn a system and then just blindly take every signal that appears. But the reality is sometimes the context doesn't match the signal. I'm personally not taking every setup that matches my rules. There's some times where the market conditions don't make sense. Sometimes the price action is a bit sloppier than you think. And in general, if you feel bad about the trade, you shouldn't be taking it. You shouldn't force yourself into setups that don't make sense. But a problem I see most traders make is oftentimes they're just taking setups based on the system that's spitting out this information. And they're not able to discern different market conditions where their setup might not pan out. So part of the learning curve of trading and the experience factor is being able to recognize low probability conditions versus high probability conditions. Now that can come in the form of desynced markets or just slow and unusual price action. And you have to be aware enough of market activity and order flow in general to be able to position yourself during the right times. So if you're a struggling trader and you notice that you're taking every single signal that appears from your trading system, maybe you just need to add some filters that keep you out of the market when everything doesn't align with you. There might be certain days where you underperform or before a specific news event. These are all important aspects of your trading system, and you have to understand where your system might fall short. For me personally, I often don't trade on Mondays and Fridays. I just know historically I don't do well, and even if a setup appears that looks A+, I'm not going to take it. So again, not every setup needs to be taken. You need to have the right context behind it, and you need to be able to time it properly. Lesson number 3 is a big one. It's knowing when to trade aggressively and defensively. There's a really big misconception where every trader needs to take 1 to 2% risk on every single setup, and I really don't believe in that. There's sometimes where I'm risking 0.5% 0.5%. There's sometimes where I'm risking 1%. There's sometimes where I'm risking 3 or 4% on a specific trade. And that really comes from experience and knowing the market conditions I'm in and being able to decipher what's an A+ trade versus a B+ trade or a C trade. The inexperienced trader cannot determine and grade their trade appropriately, which is why they're making mistakes. So they might be sizing up on a trade that I might grade as a C or a C+ just based on my experience level and all these different factors that I pay attention to, whether it's the news, whether it's market conditions, whether it's specific order flow. These are all things that I'm paying attention to that gives me a specific grade of a trade. And oftentimes it really comes down to instinct. There's sometimes where I just feel really good about a trade because I've seen this setup pan out in a certain way over time. Now, there's often characteristics that I'm looking for. I'm looking for activity on the tape. So I want to see the bid and ask moving around a fair amount. And I actually don't want to see the market trading very narrowly in a thin range. And the bid and ask is really not moving at all. That often signals that the market is inactive. There's not a whole lot of participants at a specific level. And I need to see real activity. I need to see displacement. The inexperienced trader can sometimes, they don't pick up on these different clues that the market is telling them. And that's why they're oftentimes sizing up and trading aggressively when they should be trading defensively and vice versa. When I'm trading defensively, some trader might be trading aggressively. Now, trading defensively is another topic, but essentially when I get into a position and it doesn't move my direction, I have to be able to just step away from the charts and just do something else. Where the inexperienced trader might size up and go back into the market because they are overconfident. And that's really when I'm less confident, because why would my initial trade prove me wrong? Why would I have a stop loss that's hit on my initial idea? If it was a high probability setup, there's no reason for my stop loss to be hit. So I have to be able to size down or just step away from the markets and really protect that capital. And I think a lot of traders don't have a problem making money. I think making money in the markets is the easiest to do, but I think keeping the money that you make is probably one of the harder things to do. So I really preach this a lot because I've fallen victim to it too. Oftentimes when I'm up really big early in the week, let's say if I have a 2 or 3 hour trade, a lot of times I'm just closing up shop for the week. How many of you guys out there have traded up into a green P&L early in the week, and then on Thursday and Friday, you're giving it all back because you're seeing setups that look like they're A+ setups when really they're not. The move for the week has already happened. You've already banked on the profits, but you're too greedy to be able to step away from the screens and call it a week. Yes, there are times where I've missed out on money, but I can recall more times where I've been up on the week and given it all back by the weekend. Not only does that not feel good, it affects your bottom line, and then leading into the next week, I want to trade more aggressively to try and make back some of the mistakes that I made late in that previous week. So like they say, offense wins games, but defense wins championships. Lesson number 4 is learn how to focus on the right markets. So there's an argument that a lot of traders out there say to just focus on one specific market. But I think as you get more and more experience, and if you're trying to aim for those, 5 to 6 figure months, you have to be able to start adding instruments into your watch list. So I typically follow, anywhere from 5 to 6 different markets. And what this allows me to do is be able to filter out the markets that are moving slowly. So here's just a few images. One is a consolidating market and one is a trending market. And these are on higher time frame. Now imagine if you're trying to trade aggressively in a market that's mostly just sideways versus a market that's trending very nicely. Now, at different points during the year or during specific months, some assets might be stuck in a range for multiple weeks on end. And what I see a lot of novice traders do is they force themselves to continue trading this really slow and sideways market, whereas there's other opportunities in other markets. So you have to be able to adapt and understand that money is not flowing into all these markets all the time. Sometimes commodities are hot, sometimes the index markets are hot, sometimes the forex markets are hot. For me personally, I want to go where the most activity is occurring and where the easy money is being made. And finally, lesson number 5 is don't chase losses. A reason why most people chase losses is because they can't accept the fact that they are wrong. The market is always right. And if the market is telling you that your trade is wrong, you have to be able to pick up your bags and go home for the day. People are always asking me, how do I stop over trading? Well, you really just honestly need to stop doing it. It's a discipline thing. If the market is punching you in the face consistently and you're on the wrong side, you have to be able to accept that and possibly change biases or just walk away for the day. You are never going to be able to make 5 and 6 figure months if you're trying to fight the market. Let the market show its hand first and then just ride the waves. Now, these tips aren't exclusive to anybody that's trying to make 5 figures a month. These are all general tips that everybody should be aware of. Now, there's going to be traders that say, yeah, I've heard this before, and then never implement anything that I'm talking about. And then there's traders that are going to take it seriously and then actually make that 5-figure month that I'm talking about. The difference is one is knowledgeable and the other one takes action. So knowledge is no good without actual implementation. So I hope you learned something from this video, but if you're looking for a mentor that'll trade live with you, answer all your questions, and give you the right guidance to make serious money in the markets, just like my student Mike, who just had a $20,000 day, make sure you book a call using the link in the description. But if that doesn't interest you, just drop a comment, like this video, subscribe to the channel as I'm dropping free value every single week, and I'll see you guys in the next one. This is Kyle, signing off.